Hello, everyone. Before we get started with today's interview with Patrick Karim, I just want to remind you that we will be at the New Orleans Investment Conference. I will be there in person. Would love to meet you. If you click the link that is pinned in the comments or the link that is in the description, you will be able to attend in person and meet me as well as some of the other guests such as Rick Rule, Danielle DiMartino Booth, and many others. You can also attend virtually where you get access to this exclusive content that they will be presenting. I hope to see you there. Click the link that's pinned in the comments below. Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of interviewing Patrick Karim of Badcharts. Today, it is a ugly day in the markets, at least for the metals, and so we definitely need some counseling here. We talked about our backgrounds in psychology and stuff. So we kind of need some therapy to work through some of this volatility. So let's hear from Patrick. Just what are you seeing on the charts? What are you seeing today?
All right. Thanks, Daryl, again for having me on. Indeed, look, the first premise, somebody to avoid all this emotional hardship is before anybody enters a trade or an investment, they have to decide what's their time frame. Are they a stacker? Stackers, they don't care about minus 6% day after day. Stackers, they have the mentality of just accumulating ounces. They know on the long term, very, very, very long term, that silver, that gold will be able to purchase them pretty much the same things, that they did in the past. So that's out of the way. Long-term investors, you know what I'm going to do? I'm going to share my screen because I'm going to go I could do a multi-time frame analysis of silver and show people the shorter time frames, which will please those day traders or swing traders. And then we could zoom out and see how much damage do we actually need to see on the daily chart for those long-term investors, those position traders, for them to panic. And that should really recomfort, hopefully, those long-term investors, because I don't think there's enough damage yet. But let's just go through the charts. Okay, what do we got here? We got, whenever you look at a chart, look at the top left. Here is my silver chart, daily, log scale. Let me make that scale a little bit bigger so you could read it. There you go. All right, I'm gonna maximize that. Okay, so let's see what's happening with silver on the daily chart. So it had a nice run up here. And often what I like to do, Daryl, I put it on the line chart just to make sure sometimes to see where the more important. Okay, this is what happened to silver. Here, the shorter term moving average, that's the 12-day moving average. And I was having a nice rising support line, also tagging it 1 bounce, 2 bounce, 3 bounce. But what silver did around that point, it decided to accelerate. And that's when the FOMO, I don't know how your channel was or your Twitter at that moment there, but silver decided to accelerate up here. And often that's when you hear the things, this time is different, we broke the banks, I don't know, all the stuff we hear. It happens. Look, people are, the price is confirming I was right. The price is confirming, my narratives or my fundamentals. And the crypto guys did the same thing. I remember when crypto shoots up, crypto sound money, whatever, the narratives, they backfill, or people feel more confident about their narratives when the price, follows suit. So silver a couple of days ago actually lost this rising support line, which was the first warning shots. I'll put it exactly here. Where's my vertical line? So right here, silver lost that rising support line that accelerated 1, 2, 3. And here it just broke below there. A couple of days ago, it broke below that. Look, it's not the end of the world. That is just telling you that angle of ascent, that steepness of ascent, it's slowing down. So I don't know what story I could tell you, but it's like before you could go in reverse, you have to slow down. So let's say you're going on the highway now, you've attained cruising speed, but after that you're starting to lose HP, you can't go up as fast anymore. So you're starting to slow down. It makes you more vulnerable for either more slowdown, but if you're slowing down, you're still going up, right? It's just you're not going up as fast. And here I have the distance from I wish everybody would use this indicator, the distance from the 36-day moving average. So here, this bottom pin, guys, is the distance of the price from that red line, the 36-day moving average. And what you want, the low risk entries, they're somewhere here where price is coiled close to that 36-day moving average and exploding away. That's you getting on the ramp, getting on the highway and hitting the accelerator, and you still have a whole bunch of HP left in your engine to be able to outpace, the car behind you, keep outpacing. That's like, it's the best place to be because that's where all the money's flowing. You have less risk of drawdowns. That's when you have the greatest gains. I call this the returns over time, the ROT. The greatest returns over time. If I take every single one of these days divided by, you know what I'll do for you guys? Because Patrick, if you talk and you don't show us, I don't believe you. So here, look at that. So here in 36 days, and in 50 days, silver did 40%. So if you do, where's my calculator? I wish TradingView would, so let's say 40% divided by 50 days. It gave you 8% per day. So that's a high rod zone. And often when you lose a high rod zone, you're not able to do as much gains. Or sometimes you don't do any gains at all. You just go sideways. So we lost momentum. Yeah, we were look at this. I'll zoom out there. This is, and don't worry, guys. Like here, look, I'll zoom out. It's rare. The last time we were this stretched, it was during that crazy move there we had back in 2020. Let me zoom out like this. That's the last time we were that stretched. It was back then, and that's fine. You could still be stretched, and it doesn't mean you go, you exit everything. But if you're stretched and you lose that rising momentum, that's the market telling you something. So now we lost it. The low risk entries, they're down here somewhere. The next one's going to be here. So what's a good exercise guys could do is just draw how this could look like. Maybe something logical, something that's happened previously in the past. So the next time to enter it for silver is probably going to be when the price, I'm going to put my candles on like this. When the price does something like this there, I don't know how it's going to maybe go here, 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 and bam. The longer it takes to correct here, I know people, they want instant profits, all that, but
they want profits forever.
Look, this is if you guys could wait just a little bit and let's just let this consolidate a little bit, create this beautiful pennant, bull flag. This is the launch pad. If ever you want a launch pad to higher up targets, you take the pull, add it, and here you get a break on the flag. That's what you need there to go up higher. You need to let the profit takers, the one that bought down here there, that bought at 38, taking their profits, you want to let these guys get out of the system, let the price do its thing, consolidate, get a new batch of buyers in, which they're ready to hold at that price, and they want to only sell higher, and that's going to be the move that's going to bring you all the way back to higher up. But the thing is, guys, I don't know how long that's going to last, this consolidation. Like, what if it lasts? I don't know. Let's do it like that. I could stretch this thing. I don't know. Like, it could even create some type of. Let me do it like this. It could even do a false breakdown here. So here I have a longer term rising support. The markets love doing that, creating false breakdowns. Let's say here. We'll try like this. A false breakdown here, and then you have technicians like me going bonkers. Oh, guys, we lost longer support, and then after that, it does a reverse move, retest here, and then after that, it does a reverse move through that, and bam, off you go. So we don't know how this is going to look like, but we do know it's happening. So it's gonna. Another trick you could do, guys, is use this.
Would that be the formation of a bull flag right there once it consolidates sideways?
Yeah. Bull flag, if it stays like that. Sometimes you have these things called expanding descending wedges, and those are brutal for the emotions if you held on, because it's a bullish descending wedge, but that means the price has to go all the way down here to create that wedge, right? So that hurts, like, emotionally when you see your NAV there go down. While this, I didn't draw it very well here, but hold on, I'll do it nicely for you guys. It's very tough there. If that's a bullish expanding descending wedge, so we go here, retest that, and then eventually it will stop going down. But how long? That's why, again, let's go back to the original premise. Are you a day trader, a swing trader? I'm going to zoom out to see like what type of damage it is, but you don't know how long that's going to be here. You just don't know how long that's going to be. And the best advice is often for the traders, you just exit as soon as you realize you have momentum loss. Even if it does rocket back upwards, you exit here. And if ever that consolidation pattern finishes, let's say it's shallow. Let's remove that, remove that, remove that. Let's say we just get a shallow pattern here, then fine. Then you get back in. Even if you get in a few percentage points higher, it's I see that as insurance. It's just insurance, the just in case, right? That scenario where, because let's say it does resolve fast there. I don't know how fast it's going to resolve, but let's say it resolves fast and Patrick, we were wrong to exit. Price went, I had to buy a 5% higher, 8% higher. Well, it's almost like because something did not happen does not mean it could have not happened, right? It's a basic economics 101, right? The broken glass fallacy. I don't know if you've heard about that there. It's like you break a glass and people think that's a net positive for the economy because, oh, well, that guy's going to have to take his money. He's going to have to pay the glass maker to make a new glass and create job. But what they don't see is he took that money to buy the glass maker, but he could have, that money could have went elsewhere. If he didn't have to break that window, he already had that money. He could have decided to get a new employee. He could have decided him to go buy some luggage or some fancy clothes, right? So he took money away to pay that glass maker, money away that could have went to somebody else. So because if this resolves bullishly right fast, it does not mean that the scenario for a longer term correction could not happen. I'll zoom out there. Let's go to the weekly, guys. Did the weekly break down? So see all these little lines I did, guys, on the daily, you can barely see them on the weekly. I'll remove everything. Daryl, look how stretched we are, even on the daily. My goodness. It's like I posted on Twitter there. It's like people think when the price goes up, like you can never correct. Or it feels like it won't, like, it's going to go on. It's different this time. But look again, super stretched. Here's 2020 a stretch, and look at that, the 2011 high. I'm not saying it's this, but the last couple of times we were that stretched, it's like important corrections came out of it, important ones. Like even the 2016 run, we weren't as stretched on the weekly, and we went like sideways forever. The 2020 peak went sideways forever. My goodness, I'm looking at that. I'm not kind of happy. I'm not happy there to tell you guys this. Here's the GFC one, where as high unwinded. Look what the silver price did. It went down, but at the same time, it created another great opportunity, to go long eventually. Here, look at this peak here. My goodness, are we heading into this type of correction? It looks like it. It's crazy. I don't know. I don't know what to tell you, but it's something. If this keeps on winding, look, I'll tell you where my line in the sand is, Daryl. It's right here. One touch, two touch. If we lose this rising support line here on the distance from that 36-week moving average, then you got to expect some type of important correction there. Right now, there's not enough damage on the weekly. Even here, you see, look, I did not lose that 12-week moving average. That's a thin blue line. I did not lose that rising support line. I did not lose my rising momentum line here. So there's not enough damage yet so far on the daily chart. So the daily chart has to keep correcting. If the daily chart does one of those longer term corrections there, then we're going to see something here. But silver needs, you need a cool down there. And it's never, I never like it when price goes up too fast because it just creates damage on the chart. The low risk entry on the weekly chart was back here. And I love showing this because I want people to remember this. The next time they feel FOMO and they buy anywhere up here, go look at the distance from moving average and be objective and truthful to yourself and say, guys, look, even if silver does double or triple from where I entered, was I entering at the low risk entry? And on the weekly chart, the low risk entry was somewhere down here, right? Coiled and tight. So and there, see, greatest gains over the shortest amount of time that happened there. They don't happen when you're up here. So look, even here, maybe on the weekly, let me zoom in there. Goodness gracious, guys. 1, 2. Okay, so the week, even here, so here is a longer term rising support line on the momentum. But you'll see the 1, 2, 3. Yeah, if the shorter term one closes, that is some type of damage. So it's like stage 1, you know, of your disease. It's like, okay, I have some symptoms here. This is not optimal in a bull run. You don't want to see momentum slowing down. You want to see momentum keep going up. So that's stage 1, right? Doesn't mean you're going to get a huge correction, but it's telling you we have to see where the week closes. Then after that, we're going to eventually probably retest that one. And if that one fails, then we got an even more important slowdown.
Yeah.
I could show you the monthly. Maybe if we go to the monthly in there, we get even, let's see if we have damage. Reset chart. Here's the monthly. Even, look, all these squiggly lines I did on the weekly there, you can barely see them. Let's see how stretched we are in the monthly. My goodness, silver moves so fast. It's crazy.
Mm-hmm.
It's as stretched as it was on the monthly as it was back in those 2020 silver squeezed moments. It's as stretched as it was 2006 before it consolidated a couple of years, as stretched as it was right prior to the GFC in 2008, the peak. It's as high or higher than it was back in 2004. My goodness. But it's not as high as it did back in the 2011. So statistically, you know, we're in outlier territory. The distance from moving average is often lower than that. Low risk entries, guys. It was down here. And then you got another one here. The halfway flag through there. But it's like buying silver, like guys, if you're not a stacker, if you're a trader, even a position trader, somebody who wants to get in on the longer term, you can't advise. You cannot buy up here, right? The lowest entries are down here. If you miss them, I know I sound mean sometimes, but I'm sorry, you missed them. You know, you can't. It's like if you didn't, you know, in life when you get these opportunities, Daryl, there's timing and opportunities, and the timing's there, the opportunity's there, and you just I don't want to say chicken out, but you know, you decide not to pull the trigger. We've all had those moments, and they were back. I know with hindsight, because the price went up, it's easy to say that stuff there. It could have easily, like, sometimes you have breakouts and they don't materialize. But what I'll tell you is, while not all breakouts materialize and go crazy like silver did when let's say somebody would have bought in early 2024, we do know with the number of charts we've analyzed that you have the most probabilities of it doing well. You have the most probabilities of having the higher returns over time when you have these breakouts from coiled and tight. Look at that. Like,
Yeah.
That it took 2 years there. How many years did it consolidate? 3, 4 years, goodness, it consolidated. That's like beautiful, you know?
We've just made a discovery, the Theory discovery on the Poplar property. It's really captured the attention of a lot of people, including a number of majors. There's already a big resource base there at Poplar. We're drilling that out as we speak, so expect good, strong news flow from us over the next little while. You want to be invested before we start to drill our Copperview project. That anomaly we have there is outstanding, so I think that's a chance of seeing a major re-rate. You can find more about Vizsla Copper at vizslacopper.com.
So looking at the momentum, obviously here the momentum isn't as high as it was in 2011 and such. And so I'm kind of wondering, I mean, the price is higher than it was in 2011, but the momentum isn't. And so I'm kind of wondering if that momentum hits that level that it did in 2011, what does that mean for the price of silver measured in dollars?
Yes. Well, that momentum is just like the distance from that 36 period moving average. So now that's the 36 month. And it just oscillates and resets all the time. So you could have a much higher price point. And you're right. Why this was scarier for silver, it had been running hot for 10 years right here. Like it started a crazy run. When you have these blow off tops at the end of a a decade long run. And also here, I'll show you this chart. XAG USD price in SPX, new pane. You also had, this is silver versus SPX. You also had silver, well, I can't say shortly after there, but silver after that started falling apart versus the SPX, and that was also a warning sign that was that damage was just too much to be overcome. Look,
Okay.
when I show these charts, people they always say, "Well, Patrick, it's different. It could go up much higher." Well, it could. Like the momentum has not broken down on the monthly chart, so this is the hope. If somebody wants to pray and hope, there you're hoping now that the damage we saw on the daily does not cascade on the weekly, and you're hoping that the weekly does not cascade on the monthly. You could still. You're at this stage. Look, there's no low risk entries. You're not necessarily bearish. This is another thing I want to touch on. It's not binary, guys. It's not. Because let's say I tell people back in 2011 it's starting to fall apart a little bit here. Okay, let's say here. Let's say I had this nice run up here. Let's say we do this again like today there. We run up, we have a red candle, and then I create some type of top here. Let me do a little squiggly line action. Let's say it goes bounces here. Let's say it goes here, it goes there. Because we're able to identify that the bull run is running out of steam, or there's a possible correction starting. Because remember, all important tops, they always start with a bullish looking correction that ultimately fails, right? Everything looks bullish here, like a retest. Somebody could have drawn on the smaller time frames, like a bull flag or a pennant, whatever you want to call it. Mm-hmm. So they always start like bullish looking corrections that fail. You're not necessarily bearish here, even if you're agnostic. So how could I say you're bullish? You're bullish when price, I'll mark it right here. You're bullish here. Price, breaks out above you're riding but here, all that means is you're not bullish anymore. But if you're not bullish, it does not mean you're bearish. You're agnostic. It's like often you'll see that the 4 stages, like Stan Weinstein used to say, right? Stage 1 is the base, agnostic. Stage 2, the bull run. That's where you're in. Stage 3, the topping, could either be a continuation upwards, or it could be right before the bear market. You don't know. You just know that a top is a top and not a continuation pattern only after it fails. So during the stage 1s and stage 3s, before the stage 4 decline, stage 1 and 3s, those odd numbers, those are agnostic. So let's say this would fail eventually. I won't short silver. Like, you don't short something that is not bearish. You don't, or how could I say this? You don't short something that's not bullish anymore. That makes no sense. It's like you think everything, price always has to V-shape, right? It doesn't always work that way. Sometimes you have nice rounding tops like this, Here you become bearish, right? This is where I become bearish silver. So it could take many years before I ever become bearish, because it was so bullish for such a long time that before you get bearish for silver, you need some crazy distribution pattern. You need to lose the 12-month moving average. You need to lose the 36-month moving average. You need to close below horizontal support. You need to close below the cloud. So you're just not bullish when you start losing, or not as bullish as much when you start losing rising momentum. And this I don't like too much there. Also, it's the volume. Not always, but important volume. You often see them either at bottoms, carving out bottoms, or carving out tops. So you see the volume going up, people, there's so much volume. I'm always wary about that, because if it comes in conjuncture with losing rising support, then that marks often the top there. Look at that here. Look at the volume going up, up, up. Then after that, that was the top. But after that, right away, silver, like 3 months later, bottom. But it had huge volume here also at the bottom. Here's the 2011 top. You see volume going up. That's fine, because the volume could keep going up. But with hindsight, if the price falls and then you notice that there was that high volume peak, you'll often see them where bottoms, not always. Here you see I had some high volume. The market was trying to carve a bottom, but ultimately that failed again. But here's a silver squeeze right here. Look at that peak volume here. Look at that. Mm-hmm. Peak volume versus, what it had before. Here you see carving out the bottom. It was trying to carve out the bottom here. It failed. But look at that. Look at that crazy volume right here. My goodness. So with hindsight, if the price does go down, because what can happen to the volume is it could just keep going up like that, right? You can't use that crazy volume could be followed by even crazier volume. There's no, like, who knows how high that's going to go. But with hindsight, we'll be able to be quarterback this and say, oh yeah, look, there was peak volume. Of course, that was the peak. But, you know, it just happens that you do see peak volume at bottoms and peak volume, you see that at tops also at the same time.
Yeah. So looking at if we could transition to gold, so I was talking with Rick Rule, and he was saying that he was trimming and de-risking some of his portfolio back in, it was a couple weeks ago, about 2-3 weeks ago. And he mentioned that the price got far ahead of his targets as far as for a lot of the juniors were like 18 months out. And we've already ran up significantly past those where his projections were. And so he was de-risking. So for me, I actually took heed to that advice and I started kind of de-risking as such. And then now that I'm looking at the charts, it's actually confirming, that, if you would have taken some profits, you could, obviously buy some of the equities or some of the metals a little bit cheaper than where they were. And we don't know where this dust settles or how far the drawdown is going to be. But it seems like, the charts were communicating this, that we were overstretched and that we were due for a pullback. We did have that pullback last week after the tariff news, and then we bounced back. And then today, I don't know the full reason, like if there's some fundamental reason or if it's just because we were overstretched or whatnot.
Well, yeah. So because look how stretched we were, Mike. Like, it's crazy. And we still need to let the dust settle a little bit more there. But often, even when you mention to people that you're stretched and the price keeps going up, after I mentioned that, people think that you were wrong in saying it was stretched and there was no low risk entries. And again, but with hindsight, sometimes what often happens is price goes up after you start seeing the symptoms of the issue. And then after that, what happens is even if the price does go up, it goes up a little bit, but then it goes down below, and then over time you wait with when you let the dust settle, and you'll see that the market decided that zone, there was a zone where, and that zone was probably very close to where, how stretched you were from the moving average. But look at that. Look how stretched, look at this there. Look at that. I'll put that line there. We're higher. The only times in the 1970s there we've been as high as that there. So in it itself, it does tell you again, everything I told you for silver applies here. So everything, the low risk entry for gold was back in late 2023. So if you missed that, you missed it. It's like you just missed it. You missed that entry.
That was the easy money.
That was easy money. But you had to be looking at the charts or something. But that was the easy money, right? Accelerating away from the moving average. You're going on the highway again. Horsepower. You got even the nitro tanks full. You got all the tools, everything you need to have this type of run. You had it. It doesn't mean the run always works out that way. So now gold is fine as long as 1, 2, 3. That's a beautiful rising support line. As long as it's able to maintain and not fall below. Look, I don't even have to look at the price. As soon as we got that close here, let me move that. Look, even here back in 2020, as soon as we got that close here, gold was starting to correct a few months, up, down, but the damage was worse than that because it wasn't just that correction. Remember again, people, they always, if they have a position, they're biased. It's going to be a short correction. You can't hold the metals back. We broke the system, all that stuff. But look what happened. It corrected, my goodness, for 3 years. And even had a crazy false breakdown here. And that must have been horrible here. Because here, yes, the price did go up eventually. But if you're objective, when it starts to look like that, you're below both moving averages. You have just some remnants of the cloud left to support. You gotta say, my goodness, it's are we heading into another bear market? It didn't work out that way. But once you lose rising momentum, guys, the corrections, they're often there. You don't know how long they're gonna last. The low risk entries, here you had a halfway flag. And that's it there. That's it. And look at that. Look at all these beautiful classical measured moves there. Look at that. Pull, flag, pull. Look at that target. It's like you've reached it and you surpassed it. Rick Rule was saying he surpassed his targets. Well, even classical TA is telling you that these pull flag patterns are being reached. Eventually, these pull flags will create a bigger one, which will create eventually this will be this. It will be, it'll be those two pull flags will be one big one if you zoom out, right? Like those are the higher up targets. But now we're talking, again, I'll go back to the first thing we said here at the beginning is, what's your time frame, guys? Don't be a trader that wanted to start making a quick buck being a trader, getting trapped, and then you end up being an investor, right? That's like horrible.
You end up being a bag holder.
Yeah, well, yes, that's that's a definition of bag holder. Somebody who did not have intention of being there for a bag holder, but then after that, he was forced into it because he refused to accept that the price was falling apart. He refused to accept any type of small loss. And any professional is going to tell you that you're better to take 5-8% right away because a 50% drawdown means you need 100% just to break even. While if you lose 5 or 10%, what do you need? You need 12% to get back break even. It's not the end of the world, So, it's hard lessons. It's tough, especially if you get it on FOMO and on the storylines, because the greatest storylines practically always happen when the price is just ready to correct there. It's just, but look, super bullish gold long term, like super bullish, like even on the quarterly. Let's see on the quarterly, is it stretched? Man, even on the quarterly, it's getting stretched. Just when I'm about to, even look at the quarterly chart, the distance from the 36 quarter moving average is getting stretched. Goodness gracious. It could still do like a 1970 stuff there, but it's stretched. It's stretched. Even the measure move here, here, pull, flag. I'll tell you one thing. It's fine. Again, I'll say it's fine as long as we're able to stay above these rising support lines. Because sometimes you lose these rising support lines. It doesn't mean you go down for the count. Look at that. Even after gold, this is a great example there, actually. Gold lost rising momentum here back in 2010. But look, the price kept going up. But I'll show you the greatest gains over the shortest amount of time. They probably happened here. Here he did 206% in 25 months. Or where did I lose my rising momentum? Maybe a little bit before. But it's not going to make much of a difference. 211%. And after that, it did 73% in 16 months. You see the difference, the returns over time. If I do here, 211% divided by 24 months. So that was gold gave you in this high rod zone, high returns over time zone. It gave you about 8.7%, 8.8% per month returns. But after that, after it lost the momentum, even if price did go up, it gave you 4.5% per month. So it's all about, with these techniques, you're able to spot the fastest car, which still has the nitro and the gas tank and all that stuff filled up to the brim. That's the car you want to get into. So even if the price does go up and people say, I'm still making gains, sure you are, but are you optimizing your time, right? Some people are older, some people, they want to maximize your time. So even if it did go up, the greatest gains were done for the early birds, right? And you can see by that chart that we are in a higher rod zone. Here we had a crazy run. Here we lost momentum. It consolidated for a while. Then we got another shot at glory here. But after the second shot here, we're how much fuel do we have left there? And the momentum could break down. Price could still go up a little bit, right? Sometimes you have bullish corrections. They look like this, Daryl. So sometimes, let's say I do break down. We have correction here, but the price, that's it. We could go up, but not as fast, So people will be happy. They'll be making money, but they won't be making money as fast. The angle here, it has a higher chance of being like rocket ship angle the more it resets here. So the more it resets, once you did a full reset, then you have chances of having a like really acute trajectory angle here. So
So
yeah, goodness,
what
even
price
gold
targets
stretching.
would you be looking at? So like if you let's say if you were an investor waiting on the sidelines, just trying to see when's the best time to get in, investor or trader or whatever, what price targets would you be looking at? So for gold and silver, to jump in.
Well, I would. It's not about price for me, but it's about the structure, like like the consolidation leading to the price. But you'll see often, even in a bull run, there you'll get some retags of the at least here. What's that? The 12 quarter moving average. Let's go to monthly. Maybe we're a little too far, but yeah, we're gonna at least test that 12-month moving average. Will get tested eventually. So you see here these corrections. Let me. You see, if I have some type of pattern like this here that's able to morph like a retag of the 12-month, then some type of pattern that's playable like here, maybe another one like here, then the breakout. So eventually we're going to get something like that. So look how far we are now. The 12-month moving average is at 3,200. So it doesn't mean, remember, correction is not just price going to touch 3,200. It's price and or time. So the price could just go sideways depending how it could go sideways. I like drawing these, maybe sometimes these bullish expanding wedges, something, or descending wedge. And hopefully the next low risk entry will not be at the 36-month moving average, but would be at maybe at the 1 year moving average, right? So
Yeah.
this could be the price point, maybe where it could be, okay, this is funny. I'll say this. The next low risk entry could still be close to 4,000. I just need the time I need the market to do its thing here, whatever it's going to look like, and then I'll get in. Sometimes I won't say if we're lucky, we could get in at maybe a lower price point, 3,900, 3,800, depending how, I don't want to say devastating, but how is this going to look like? Like, is it going to go all the way down here? My goodness, like it could do that. Like, are we going
Yeah.
to go retag like we did in 2008? Retag that 3-year moving average, or it's going to be shallow and we're going to get a second shot at glory. But again, the best low risk entries. So yeah, so somebody on the sidelines, you have to at least wait for some type of 2, 3, 5 months, 6 months, 1 year correction, whatever it is. At least you got to wait for that. But the problem is these long-term charts. They're getting stretched, so it could take a while to get a nice, beautiful reset. It could take a while. My goodness, it's like, look here, we're hitting resistance also here. My God,
Yeah.
it's so we're still in an uptrend. You're in an uptrend. Objectively, you're above an inclining 12-quarter moving average. You're in an uptrend, but not all entry points on that uptrend are equivalent in nature, right? Like I showed you, they don't all generate the same returns over time, propositions. They don't always, entering here, even if you're still in an uptrend. Patrick, I'm in an uptrend. How come I could enter anywhere in an uptrend, right? I would make money. Well, it's more nuanced than that, right? You might get triggered out here, or you might you might have opportunity cost because the price is going to go sideways or down, erode your emotional capital, play mind tricks on you. It's not the best place to be, right? You want to be
Yeah.
where it's the safe zone, right? The comfort zone, right? You don't
Yeah.
want to move away from that.
So you mentioned earlier, whenever you start to get like the bullish headlines and a lot of the media and such coming out, and like which we've seen with gold here recently, with Goldman Sachs, target 5,000 next year. I think Bank of America had a $6,000 target, and I think Jamie Dimon of J.P. Morgan had a $5,000 to $10,000 target in the near future, the next 5 years or whatnot. And it seemed like there was a lot of bullish FOMO, kind of coming out of these major headline articles. And so was that like a signal where it's like, okay, yep, we're getting overstretched. We got the bullish headlines. We're looking at the charts. We're seeing the momentum. Are those all signs pointing towards like, okay, we're going to have a correction?
Well, yes. So with hindsight, we'll know that those bullish headlines did confirm, like that Barron's magazine, like death of U.S. equities back in the 1980s. But I'm sure there were a whole bunch of other bullish headline news that weren't tops back then, right? It's only like this stuff is backfilled with hindsight. Like people are going to pick and choose the headline news. To say, oh, look, of course that marked the top there was on the cover of Barron's or so. Even if people do put out bullish storylines like these crazy targets, it doesn't mean it's necessarily the end. But if the price does start falling apart and you did have those bullish headline news at that same time, then yeah, you could use that as to do a nice tweet or post on X and say, people, look, it was apparent. But you have to wait for you have to let the price break down a little bit. But yeah, you're right. More often than top, I'm pretty sure they would take that distance from moving average, and we'd ask AI, plot me all the magazine headlines or all the whatever, like methodically across it. I'm pretty sure there's going to be a concentration of bullishness close, when the price is high. Another thing I used to like to do there, I used to go on Google and do Google words. Remember that? You could put a gold. How many times people have searched for the word gold? And it actually charts like it follows the price chart, the same thing. The more the price goes up, the more people Google about it, the more people talk about it. And I'd be surprised. It'd be fun to see there if somebody would research that.
Yeah, on Google. I think you're talking about Google Trends.
Yeah, Google Trends. Yes. I haven't done that in forever. Are you doing it now? What does it look like? I don't know. Like
I looked at it recently. It was elevated for sure. I don't think it was as elevated as before, but yeah. It was getting up there. It was pretty high compared on the historical chart. Have you okay, so I do want to look at platinum. So we did have a big run up in platinum, and I haven't even looked at the platinum price recently. I'm like, where we at on there?
Look, yeah, let's do this objectively. So platinum. So here's the platinum futures. Look how stretched they were. Also super stretched. So platinum had a great, beautiful breakout. My goodness, you won't see it. Look at that. Did you see that, Daryl? Mm-hmm. Look at this crazy, beautiful breakout. I'll put it on the line chart. It's like Picasso there, or somebody drew this there. Look at the beautiful touch. The 1, 2, 3, almost 4, 5. Maybe here we had a tiny false breakout, but then after that it launched. Like you don't see these opportunities very often there. So again, the low risk entry was, and look, even here the distance from that moving average, the 36. Look at that, like it moved so fast, it was almost unplayable on the monthly chart. But look how stretched it is there. Look how there's no way you could buy this. Yes, it could stay high. So now you gotta this. You see, this is what's gonna. I don't want to say this is what's gonna happen, but price is up. We're gonna have some type of momentum break. We're gonna enter a correction period. And then the next low risk entry is when, it's going to be down here somewhere. We just don't know. Look at all the looks of these consolidation patterns. That one went really deep and sideways. That one was very shallow, but it went sideways. Sometimes they're shallow and short. Like it's like there's a whole bunch of different women at the bars there. Take your picks there. You don't know what you're going to get. It's like you just don't know what type of correction you're going to get. So we have to wait and see there. So momentum has not broken down for platinum. There are 100% zero low risk entries right here. Again, does not mean you're bearish. It just means you're not bullish the same way you were back then. It's an uptrend, but you got to expect some type of correction. But how is it going to look like? I have no idea so far there. We just got to. It's going to take many months there for this to. It's going to take many months. Even the targets. Did my targets get reached? Yeah, here's small consolidation. Here, whoops. Oh, hey. Okay, here, yeah. Let me zoom in. Yeah, even some measured moves I got tagged here. They don't always get tagged. Sometimes they overshoot, sometimes they undershoot. But it's just it's the concept of just the energy shooting out of that big pattern, consolidating a little bit, shooting up again, and eventually this will become on the next, probably on the next pattern here. Hopefully it's big. This is the pattern that's going to lead to the move all the way up to 2600 there or higher. depending like how, like it's beautiful there. It's beautiful to see this, what's happening now, because it's a reset, consolidation, correction, and then whoever was on the sidelines, they'll get a great opportunity to get back in. I don't know when, I don't know what price point, but there will be another chance at glory. But that's in the rear view mirror there at this stage.
Yeah, gotcha. Okay, well, shoot, Patrick, man, appreciate you coming on to give us this insight into the charts and everything. How can people stay ahead of the crowd? I know that you all have services and you all are always watching these charts and watching what's happening. And so I'm sure that investors want to stay ahead of the curve and not get washed out or whatnot. And so where can they connect with you?
Yeah, yes. Well, of course, you get the free stuff on X, but if you want like the nuance, reviews, communicate with me or my partner Kevin Wadsworth. We have like a knowledge base and all that. It's all on our website, NorthstarBadcharts.com. And of course, there's a Black Friday coming up there. So keep an eye out for, we're going to have probably a 50% promotion there in the next few weeks there. But yeah, it's all about, educating who wants to be educated, but at least giving them the basics to spot, when your best friend's wife or your barber gives you a tip, hey, gold, I should buy that. At least we're giving you, we're going to show you how to look on the chart and spot immediately. Look, I can't jump in here. Like it might go to 10,000, but I'm going to wait at least, for that correction to happen or that, that lower risk entry point, because they will come. There's always a low risk entry point. And if there's not, and the thing does rocket to the moon, and it is different this time, guess what? You could play something else. Oil's eventually going to create one crazy breakout there. Oil always tracks silver and gold over very long periods of time. So, you could have your eye out on the ones that aren't loved right now, and eventually they're going to create some great opportunities for great returns over a very short amount of time.
Yeah, for sure. Yeah, appreciate that. Well, you all be sure to go check out NorthstarBadcharts.com. Also follow Patrick on X. Hit the subscribe button. Love to have your support. And Patrick, until next time, thank you for coming on the show.
Thanks, Daryl. Take care, man.